Greetings and welcome to the 2013 Year in Review for Panama City Beach, Florida. In this short video, I'll give you an overview of the real estate activity for 2013 and talk a little bit about where things might be headed this year. To project where the market might be going, let's take a look at what happened last year, starting with vacant land, then housing, and finally condos. With the real estate market now being in a full-fledged recovery, new construction has really picked up, something we expect to continue throughout this year. Since builders need lots to build on, you would expect to see a lot of activity on vacant land, which was indeed the case in 2013. Monthly sales were up 40% from January to December last year, while the amount of inventory was cut just about in half. Ladies and gentlemen, those are very, very dramatic numbers. With so many lots being purchased with only about half as many left to buy, you can expect to see prices continue to move up. Now let's take a quick look at the Panama City Beach housing market for 2013 by breaking it down into two categories, resale homes and new construction homes. It was a strong year for resales as we saw over 16% appreciation in 2013. That's right, over 16% appreciation for last year. The average price per square foot was up over 17% by September before seeing the market pull back just a bit at settling just over 9% in December. Homes are staying on the market for less time, down from 138 days in January to just 97 days in December, showing that buyers are out there buying, while inventory levels also moved down from almost a 10-month supply in January to 5.9 in August, softening a little to 8.18 in December. Anything over about an 8-month supply usually signifies a buyer's market, while 6 to 8 months is a more neutral market. So as you can see, there was a very dramatic move in 2013 from a pretty strong buyer's market towards a more healthy neutral market, even touching a bit of a seller's market in the third quarter. New construction picked up a bit in 2012 and really got on a run in 2013. The average price per square foot rose 9% from $126 a square foot, where resales finished the year, to around $138 a square foot in December. This market is in even more demand, with inventory having moved from around an 8-month supply, a pretty normal market, down to around a 4.5-month supply, showing us that sellers, or builders in this case, really have a strong position when negotiating contracts. It was a very, very good year for condos in general. Let's break them down into two groups: anything built before the year 2000 and then everything built after the year 2000. Older condos did well. These condos sold on average for $162 a square foot in January, rising to $187 a square foot in June, then peaking at $196 a square foot in November. There are less and less of these units to buy, with inventory moving down from a 13-month supply in January to just under 10 in December. I've talked about it before and I'll say it again. As inventory levels move down, prices tend to move up. Newer condos, those built after the year 2000, did very well, moving from an average sales price of $241,558 in January up over 16% to peak at $286,263 in July. Not surprising that things cooled off a bit after rental season, down to about $274,000 in November and settling at $259,000 in December. The average price per square foot was also up, of course, just about 8% from $207 a square foot to $224 a square foot by year end. Also, there is substantially less inventory in the condo market, down to around a 6.5-month supply from just over 9 in January. Most experts agree that 2014 looks like another good year for the market, although maybe not quite as strong as last year. There was good news out of last month's Fed meeting that the Fed was looking to keep a lid on interest rates while beginning to taper bond purchases. However, one of the reasons that I expect a little more tamier in the market this year is due to where interest rates could be headed. Take a look at where the so-called experts think rates will be going. Now, take a look at what this means to a buyer's actual purchasing power. At current rates, buyers can buy a $200,000 home for just about what it might cost them to buy a $180,000 home if rates go where most people think they will go. The $400,000 buyer today would only be able to afford $360,000. And the $600,000 buyer would only be able to afford about $540,000. That's a 10% difference in affordability, ladies and gentlemen, and the most important reason for buyers not to wait to buy. Add to this that the Panama City Beach real estate market is a very seasonal market. With more sales in the spring and summer pushing prices higher, it is even that much more important to get into the market sooner rather than later. Combine the interest rate factor with our seasonality of sales, and if you are buying a house to live in, it is very likely that your monthly payment will be higher and the house will cost you more money if you wait to buy. If you're buying an investment property, it is very likely that your monthly payment will be higher and will cost you more money if you wait to buy. If you're buying land, it is very likely that your monthly payment will be higher and will cost you more money if you wait to buy. I hope you found this brief look at the Panama City Beach real estate market informative and fun. Please share it with anyone that you think it might benefit, and also feel free to reach out to me with any questions on your specific real estate plan. This is my 11th consecutive year full-time in the real estate business, and I would be happy to help you if I can. Thanks for watching.